Welcome to ETF 360. I'm Tom Lydon with ETF Trends, along with our Director of Research, Dave Nadig. And we've got a special guest, Steve Sachs, Managing Director of Goldman Sachs. Steve, welcome. Great to have you.
Tom, Dave, always good to see you, gentlemen.
Hey, Steve, tell us a little bit about the markets this year, right? I mean, Goldman, obviously, major player in the markets. 2020 has been a year, I don't know, I can't remember a year ever like this. What's the sort of position inside the firm? How are you looking at 2021?
Yeah, Dave, it's a great question. And I got to tell you, after nearly 30 years in the markets in this industry, I say that all the time. I can't believe we're going to have another year that's unlike any other year. And then 2020 happened. We didn't see this coming. Nobody saw this coming. But when you think about, how the markets reacted, how ETFs reacted, how the capital markets worked, and they did. They worked extremely well. And in many cases, they're going to come out of this with a much shinier coat, if you will, than even before. But I think as we look ahead at Goldman Sachs for 2021 and really beyond, look, shocks like this in the market happen. While this one was super unique relative to why it happened, it's essentially reset the economy. It's reset the global capital markets. Certainly the environment that we're in right now from a zero rate environment, it's really tough to argue against, equity risk in 2021 and beyond. And I think that's going to be the key theme as we certainly get into the first half of next year. How are clients positioned in their portfolio relative to equity risk capture? And then how are they thinking about that all important and still important fixed income component? But how do you think about that in a zero rate environment? It's different.
Yeah, it is. And you said, well, Warren, it's funny, Dave and I both had full heads of hair earlier this year. And after going through this, it's been a little bit crazy. But you mentioned fixed income, Steve. Low for longer. Are we going to continue to see this for the next couple of years? And what does that mean for client portfolios? We're seeing more and more advisors push more into equities because they're just not getting paid in their fixed income allocation.
Yeah, no, Tom, that's a great question. I'm going to take the other side of the fact that you had hair when all of this started. But look, when you think about what fixed income is for your portfolio and what it does, it's the ballast. And I think we all need to take a quick step back. And it's not just a 2020 phenomenon. We've really been quite spoiled, quite frankly, about what's gone on in the fixed income markets over the last 5 to 6 years. We shouldn't think about fixed income driving return in our diversified portfolios. And I think that's going to be the challenge as we get into 2021 and even a little bit beyond until we see a more normalized rate environment, both in the US and quite frankly, globally. It's going to be difficult to not think about fixed income as that more risk aspect component. It's not what it's there for. So,
hey, Steve, let's switch gears here a little bit. I mean, Goldman's interesting because you guys came a little bit late to the ETF party, right? You weren't there in 93 and 94 when things were getting started, but you've got so many capabilities. You could have launched 100 different ETFs, something in every corner. You've been really tactical. Talk to us a little bit about why you've launched the funds you've launched.
A little over 5 years into GSAM as an ETF issuer. Now, certainly Goldman Sachs as an organization has been involved in the ETF space since day one, from a capital
on the
markets
trading side. Yeah, absolutely.
Exactly. But you're right. From a, large global asset manager perspective and being an ETF issuer, we're still the new kids on the block. And quite frankly, we kind of like that. It's given us a chance, to your point, Dave, exactly, of we had the opportunity to really survey the landscape, not just in the US, but globally, and think about what we wanted to do in this business. And the big thing is, and you've heard me say this before, Dave and Tom as well, look, we didn't get into the ETF issuance business because it was the hot dot or the hottest game in town. We got into it because, as always, first and foremost, Goldman Sachs were advisors to our clients, right? We're there to provide solutions that our clients are asking for. And more, they were simply asking us for an ETF solution. Existing GSAM strategy simply delivered through the ETF wrapper. That's the reason that, after, 5+ years, we still have a fairly small suite of ETFs. We like to think it's a very powerful suite.
Yeah. Hey, Steve, you're also embracing innovation. Talk to us about one of the favorite Goldman Sachs ETFs that Dave and I like, GINN.
Just for the ticker. We only like it for the ticker, but that's okay.
We just
quite possibly the single greatest achievement in my marketing hat aspect of my career ever is picking that ticker. It's GINN, or the GS Innovate, ETF. We think is really not as unique as everybody else thinks about it from the outside looking in. The strategy certainly, but why we launched this ETF is exactly what I was just talking about. These are the best views of our fundamental equity team at GSAM, a team of 85 plus professionals managing nearly $100 billion in assets. And it's how they think about the world over the next 2 decades.
Hey, Steve, thanks so much for grabbing some time with us. Happy holidays and all the best to our friends at Goldman Sachs.